Have you been wondering what the best startup business funding options of 2023 are and are perhaps struggling to figure it out and on your own, not sure if that's a trustworthy and reliable source? Are they loyal? Do they really care about me and my business or businesses? Will they get me the best maximum funding at the best terms and rates and much more? How about getting the 5+ best startup business funding options of this year and moving forward? Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert / business loan broker expert. And like yourself, I run my businesses too. I have one in the digital marketing agency, lead generation space, one in the health affiliate marketing space, other verticals there, other ventures. And this has been my primary focus for a while now as a business funding expert. And I work with all services. I've helped out a lot of people of different backgrounds, different industries, get the right type of financing under the right strategic partnership and roadmap. And like yourself too, I was once in that position trying to get funding as a startup, or you're watching this and you're not classified as a startup, or you've been in business for some time, or just trying to start something fresh, acquire a new business. But like many of you, I understand the hardship that comes from leaving your 9 to 5 and completely making a change and thinking, okay, I need to do something better for myself where I have more time, energy freedom, money freedom, if that's the case too, that it can help you and then unlock more doors. And I was in that position too when I was once working for a financial logistics company where I was not getting paid what I should be getting paid. And the person in front of me didn't want to retire. I thought I would take over their position soon enough. And that on top of other things with a huge contracting company servicing HP and Peace Health and a few others around that facility, that company ended up getting bought over, went down under. Things started to happen where that was a phase where I thought, should I go back to school and earn another degree? I had already studied. I went to school as a Division I soccer player for a little bit of time. I studied a little bit of sociology. Then in chemical engineering, I moved into that realm because my mind works like that. I'm very system and math oriented. I'm a cerebral, introverted person. And then I went into business administration because I wanted to start a business eventually. I've worked in construction, manufacturing. I've done those positions. But in the financial and other positions too, like warehousing, Rampage and stuff in my younger 20s and others. But in that financial logistics later position, I had to go back on unemployment benefits, food stamp cards, and I had to suck it up. And I said, hey, I'm going to start something fresh. Instead of going to go get another job / career and being fed up with this and trying to just get something better for myself. And I didn't want to continue to be a letdown to my family, just going out for a meal and being on unemployment benefits again at that time in my younger 20s. Not everything is linear. And just going out to pay for a meal, feeling guilty and not feeling like I was enough and giving them enough. And so I said, okay, I got to do something better. And at that time, I was already preparing to start my business and businesses. So aside from that, let's get into the 5+ startup business funding options. The fifth one is likely one that you wouldn't have thought of, but let's begin with number 1 here. That is 0% interest personal and business credit cards. More primarily 0% interest business credit cards. This is one that you may be familiar with, you've tried and to no avail, or you do have personal and or business credit cards. But why I bring this up as number 1 is because you have to look at the economy. You have to look at the market conditions as it is now than what it could be in a year or 2 from now. Look at it for what it is now. When I tell people too, when they're acquiring a business or they're looking at generating a higher profit, look at what your current margins are. Look at what your margins could be. What are your true profits today? What could they be in the next month? So when you have that information, you could do a lot more with it. But with 0% interest business credit cards, the great thing about these, instead of getting cash back, rewards, and points that can collect, and you might have an extra $10,000 to $20,000 at the end of the year you can use to pay off expenses, take a trip with your family, take time away from your business. Just imagine that. Being able to kick up your feet into the sand as you go on a vacation, go to Lake Tahoe, or go to your place, or go to a new place and explore. But as you kick your feet up into the sand, next to you have a cold beverage, and you're just looking out with your shades on, or somebody's next to you, or you're on your own, but you feel no stress whatsoever. You feel like you don't have to check into your business to make sure all operations are going smoothly. You don't have to do all of these things that cause chaos, continuous stress and effort, and just cerebrally thinking these things through, not even putting action in it yet. You haven't even done the action of it, but you've just thought of it all. But all of that has been diminished. So 0% interest business credit cards you can do for about 6 to 18, if not 6 to 24 months. And think about this. When you get a 0% interest business credit card, you can liquidate the cash out of these, put them on a balance transfer. There's a few other things that we can do to then liquidate that cash out of those cards. And you can use that for real estate investments, purchasing property that you couldn't have the other way around if you didn't have the cash on hand to do a down payment, pay other debt with another property that's been sold, or whatever you are doing in accumulating your rental portfolio, your commercial portfolio, your fix and flips, foreign nationals. I can go on and on, multifamily, duplex, single families, and those are classifications of more or less what I've just been going through. Apartment complexes, there's so many more. But when you go through that experience and you can take the money out of these cards, whether it's for real estate investments and transactions, maybe you're a home builder, you're trying to build a home, and in this area you have a residential lot and you're thinking about building 4 to 5 or whatever your plans are, you have the land or you need the land, these 0% interest business credit cards are there to help you. And let's say we stack about 4 to 5 of them at a time. We have a Chase card. Maybe you get $35,000 with the Chase Bank card, and then you get one with Bank of America. Now you have one with US Bank. Maybe we go to some of the lower community regional banks and so forth, and we combine even all of those. But we're going to go to the top tier to get you the most amount of funding that it makes sense for your ROI, as well as us issuing you that, so it makes the most absolute sense. So then you can say, hey, I have personal and business credit cards, or I can use. And you can use this money for anything, for expenses, for growing and expanding your current business, for a new business startup that you have, but you want to have at least 50 to 100,000. 75,000 is really your goal. So you can pay certain expenses as you accumulate them, certain equipment. Okay, you're paying that down. You're not having to worry about having any kind of remaining money. Instead, in total limits, you have about 125 to 150, if not 200,000 and above. And in about 12 to 15, and if not 15 to 18 months, we can then get more, issue you more credit. That's so good to have on hand. And those of you who were preparing last year in 2022 for this, fixing and improving your personal and business credit and not doing anything, more or less the business credit, but on the personal credit, because we're going to need to use your personal credit score to help you get these 0% interest business credit cards for the most part. And so if you were already preparing and not taking out home mortgages and doing more mortgages and then having other debt obligations you just added on top of, but you needed to, I get that. Did you really though? And so you think about it, and now you're coming to this part. Well, I just got some 0% interest business credit cards, but were they systematized? Was it really maximized with the max amount of funding that you could have got with the right cards? Well, no. Well, I just took out 2 to 3. Well, okay, it's going to make it even harder to get even more right now. Increases in limits. Well, do you have to focus on your personal? So that's where I would focus on in this market. If you have a credit partner, let's say you have a business partner who owns at least 10% of the business, but you don't have, or you have shady credit, and if they have stronger credit, you can use theirs. They can use their own to apply and secure the 0% interest business credit cards for those 6 to 18, if not 6 to 20 or 6 to 24 months. I'm not going to get into each and every one of them in this video. That's for another time. I want to go through some of these options. I'll leave more information for you guys down below in the description and or in the bio, depending on where you are watching from. The questionnaire form, that is the best place to begin. There's one for real estate. There's one for business funding. Fill those out. I've been quite flooded recently. Those of you who've been following me for some time would understand that. I'm still trying to get caught up with people. I'm going to be doing some more emailing today. I got a long list of things that I need to complete. It is about to be 11 o'clock here Pacific Standard Time. So once I'm done with this, I'm going to go do a few things. So that's where I would begin. And there's more to that process that we can do to get those 0% interest business credit cards. But that right now is very much desired. Anything you can liquidate, liquidity and equity, and I'm going to get into equity later on, but those are great options to get into. And you have 0% interest, true no doc, startup and non-startup friendly. They do require better credit though. I should have said that a little bit earlier, but that's not to say that I didn't want to say it earlier. It's just a lot of the information that I'm giving you I have to go through. But it does require stronger credit, and that goes also without being said normally. But they would want to see for us to do this credit card stacking, at least in this market, 700 and above on all three consumer credit bureaus. It used to be around 680, but 700 and above. So if you have a credit partner who owns at least 10% of the business, they can help you. And if you don't, and you still want those cards, you can get another person who runs their own business that we can prove by an EIN letter, articles of organization, incorporation, and a copy of their ID, photo ID, driver's license ID, and there could be a little bit more, but it's true no doc, and we would have to use their credit if they're willing to help you. That's all about getting a credit partner. Number 2, personal loans. I'm going to try to speed through these. Terms/installment loans, And this is where we can do a lump sum at once given to you into your account, your bank account, in the way of a personal loan. And I know that's not a business loan. Well, I thought, and there are people in my email inbox every day who go, well, I thought you could give me something with bad credit. Who is it? Whose shoes are you putting yourself in? Like, I don't have to ask that, but in what way would somebody give you a max loan when you have very bad credit? It doesn't make sense in any way. Even if somebody's cash flowing high and they have enough revenue in the business, like that goes without being said, unless you have to secure the card by offering up money to get it, collateral, or whatever you need to do to get that card, and it still won't be optimized. You won't have optimized credits. So be very cautious. Then you try to get higher credit cards and you're overutilizing the first or two, however many you have, at a low amount, at a low balance that you received in terms of that, and you're trying to get more, and so they're not going to be able to double, or they're not going to be able to help you even get more of the amount because of how you got those cards as well. Be very cautious. Personal terms/installment loans, those are great because they extend your terms between 1 to 5, if not 2, 3, 5, sometimes 7 years, not always the case, but between 1 to 5 years we can work with, and that's going to be given as a lump sum, and that's going to spread your term out, and it's going to drop your rates. So if we're seeing anything between 7 to 15%, 6 to 18%, and 6% is putting it rather low because of prime rates now, but it's relatively low. If you go into the mid-teens or so, it's still very helpful, and it depends on your credit association. But let's say you were just given a monthly payment of what, $800 to $1,000 on $20,000 over a course of a couple of years or whatever that may be. Well, that's keeping it relatively low when you consider the alternative. And if you have an existing business and you're not a true startup, but you are generating revenue, you can also look at it this way and say, well, if I'm doing $25,000 a month and I'm in this trucking business where I'm only depositing once at the end of the week and I'm depositing a huge amount, $5,000 or whatever it is you're doing, well, if you're getting a personal loan, you're stabilizing and getting an alternative to that depositing frequency that's not helping you if you're getting a daily or a weekly repayment. Now, sometimes you have to bite the bullet and say, that's only what I can qualify for, or that is what's best. I can get money immediately, get more money right away. And then once I pay off this money, I can get more money, come back to, depending on how you use it and how you get a return on investment from, if there's enough from that. So I ask the deep questions when I'm working with business owners, and I test them to see if they really know their stuff. Because a lot of people, they come into this going, well, I want the best interest rates, I want the best terms, and that's not always going to be the case. All right? With these options, they are going to help you with lower interest, better terms. So personal term/installment loan that you can get up to $350,000, if not $500,000. I've even seen it go above that, $600,000 to $750,000 plus. But those are extraordinary situations, and sometimes you're getting more time and time again. But those help you keep your payment low. So if you only had $1,000 that you had to pay at the end of the month, compared to what? An advance where you're paying back $4,000, $3,500, and you already have insurance costs. You have $5,000 in insurance. Now you're going to tackle on a $2,500 to $3,000 payment. You're paying $8,000 now, and then you have other rent, other bills you need to pay. So now you are behind, and now you got to pay a total of $10,000 plus. Does that even make sense? Where then you would be given, instead of $10,000, we maybe cut that in half, and we do $5,000 or up to about $3,500 at the end of the month in total that you're paying, depending on the business. So personal term/installment loans. We're gonna need good credit, of course, 680 plus FICO Experian. We can work with 670 because it just depends on if you have high utilization and you have high balances, and those need to be paid down first. we'll give you an answer on what needs to be paid down for the majority of this. And if it's another thing, and we could consider it, if it's not an outlier and if it's not something that's too hard to get funded because your credit profile is not in the right place and when you've been doing too much recent activity, all these things, charge-off accounts, bankruptcies, just too recent, late payments, like think about all those things and what the lender looks for and what we do. Okay, so that can work there. 670 and above on all three consumer credit bureaus we will consider too if it's based on high utilization and you just have high balances that need to be paid down. More so the high balances there that come with that. But 700 and above is really the point that they're looking at, plus FICO Experian. And if you have that on all three, like I said again earlier, the 0% interest business credit cards will come into view. So I can go too deep into all of these just so you know, but we're going through this for time. Questionnaire form will be down below in the description. I'll give you detail per detail, everything you need to know about the best options that are available for each one of these categories. So you'll know without a doubt like what you need to do. So this way you're not making the mistakes. Number 3. So we went to 0% interest, personal credit cards. The number 3rd option, I just wanted to make sure, this is the SBA loan. The SBA 7A loan primarily. There are SBA microloan programs up to $50,000 for startups. There are grant opportunities out there outside of that. And I'm sure a lot of you have looked into those, or credit unions, but you're not maximizing. It's taking forever to receive. You're not getting enough of it. There's other principles you have to look at. The list can go on and on. But number 3 being the SBA. Most people want SBA loans. They come into this thinking that, hey, why don't I just try to get an SBA loan? Why don't I just try to get one of those 7A loans? Well, for one, you're going to need to have good credit. They're in this market, they're wanting to accept like at least 675 and above. 660 can work. Sometimes it can go lower than that, but it's just going to make a harder case to get funded. It's not going to be easy to fund that. And then they're going to look at about 25 to 30% of an equity injection. Down payment is involved in that, but 25 to 30% is putting it rather high. And so you have to think about, can you put that money in? Where's that money? Cash on hand? What can you liquidate? What's in the bank? Do you have real estate property you can liquidate? We can do a cash out refinance, have that money sitting in your account then. You took out just $100,000 and you put it in the account to purchase a business. And that's why it's so useful to have rental property and commercial real estate. But I'll get into that momentarily. But 25 to 30% based on experience levels. If you've had certain experience in that business, that's what they want to see. Whether it's a management role, supervisory role, what distribution did you have around that business? What did you delegate? What did you do yourself? Were you in the operations, the finance, the product development? Were you all three overseeing everything? Were you a past owner in this business? Now, if you don't have exact like restaurant to restaurant experience, they're still willing to look at it and consider and go, well, if you're trying to get a manufacturing plant, like what does that have to do with your experience in the restaurant space? Okay, I'm going to increase production to drop and send out bread to my facility and do this. And I understand how all that works. I once worked with my dad and I did manufacturing. I oversaw this budget and okay, it's starting to make a little bit more sense, but we still need to look at it even deeper. And so that's what we're going through in all of this. And we're not trying to speculate and say, well, you think you're going to make this money. Can you really hypothetically get to that goal? If you can't, it's just not going to make sense a lot of the times. You're going to have a business plan, of course, projections and assumptions, cash flow, profitability, all these other things. And at that point, you're going to have to normally require putting up collateral. The business you're starting up, is there a property involved? Is there real estate involved? What do you have that you can put up as collateral? A lot of the times they'll ask for. And if you're already thin on that, if the lender doesn't see, hey, I can seize collateral in the event of something happening, it is going to make it rather difficult for them to want to work with. Okay, so that's one option. There are many other ones underneath the SBA. Number 4, just want to make sure I have the 0% interest. There is that. There's the personal term / installment loan. There is the SBA. Number 4, you would have thought I would have said grants, and I'm going to say that in a little bit. But 401k, IRA. You can do a rollover account, and we can extract from your past employers depending on the total amount that you have, and a lot of the times you can access up to 50% of that. And so there's a lot of benefit to doing a 401k IRA. That might be one of the last solutions. I won't get into all of the exact strategy around that or the exact system step by step. That's not what I'm doing a lot in this video, by the way. It's just to go through the options. and I've created a lot of content on steps on all of this. But 401k IRA rollover, if you have that for working capital purposes, you could use. It's a very great option that many people, they don't look at. They go, well, I'm trying to leave that money in there for a rainy day. Why not now? Why not make more money with the money you can put into your business? Well, I'm going to have an upfront cost. I'm going to already be negative. Look at my P&L, my balance sheet. I'm going to be negative $30,000. But why are you negative $30,000? Could you have done something different? Could you have purchased material less? Could you have purchased it in bulk? Reduce your cost per unit, cost per production. See, a lot of you guys don't look at those things and go, well, my expenses will be fine if I make more revenue, but your expenses are then also rising, and so you're profiting less, and so you're cash flowing less. More money is coming out of the accounts month to month than what is coming in. So there's a lot of hard problems you still have to go through, and that's why a lot of businesses go out of business. They don't have enough money to circulate in their business. They run out. They need money, but they can't get the money because they don't have the credit profile. They don't have, and there's 3 ways you can get funding: credit, revenue-based, income, cash flow backed, you can call it that, and then you have collateral. You either have one of these 3, 2 of these 3, all of them. And I look at maximizing your potential around 1 and even multiple now and in the future. None of them business trade credit as a startup. And even as a non-startup, you should be working on that. So the 401k, those are the 4. Now the 5th one, I want to get into this one. I guess I'll just say it, but grants. Then I'll get into the one that I was going to say the 5th one was really, or the 6th one, but the 5th one being grant opportunities for startups. I won't get into the whole dynamics of all of that. I've helped out a lot of people and understood what they're trying to do and how to create a proposal and do all these things and send them in the right direction. That can be very energy and time consuming, only on the fact that a lot of people don't get approved. There's already enough stiff competition. And so I have to be very truthful with people and go, hey, if you're looking for a grant, it may not work. Your chances of it is just very slim. What can we do in the meantime while you're trying to get that? What can we work with? Can we work with your credit? Can we work with you having cash on hand in the banks, property? What can we do? So grant opportunities are available. They're galore. There's so many videos out there of grants that come and they go. I don't create them as much as I didn't really create them that much in the past, but I try not to create so much. It just has too much buzz. And the people who keep creating grant videos, specifically on YouTube, that's what the algorithms like want to favor a lot of times, and they know that a lot of people are searching for that stuff. But I'm not just creating content just because people are searching for it galore. I know there's a purpose and it can help someone, but sometimes you have to be careful of those videos and be careful who you're getting the information from. The 6th option you have here is equity backed, and this is where I'm going to end it. Equity backed financing, period. This is king right here. Liquidity and equity are everything right now. Everything. Can you liquidate hard assets completely into cash? Yes or no? Do you have a chance to get 0% interest business credit cards where you can liquidate that? Personal cards? Yes or no? And that'll be very defining for a lot of people, because you're going to get to a point where, hey, the 7 and 8 figure earners, like us, 6-figure plus earners, plus, how are we doing it? We're doing it because we can self-fund our business. For one, we circulate enough money in our business where we don't have to rely on getting advances of medium to high rates, or we don't have to worry about all this crap where now something breaks down or there's a high expense here to start a business and there's nothing that's going to keep you up. And so you have to think about, how are those people earning really that amount of money? Is because they're using their credit cards that are really helping them for whatever purposes, business and in personal, and they're using them strategically. They're increasing their credit, they're increasing their credit scores, they're lowering their utilization. We become savvy when we start thinking about what's our total revolving accounts, how much of a percentage am I using on these cards versus that one, how much can I increase the limit to. But a lot of business owners who just get started get into this, I don't want to call it it's not a trap, because it depends on how you use the money. So if you're getting in advance, let's say somebody gives you, you're 8 months, 9 months into the business and your revenue is performing where you're doing $30,000. Now, it paints a different picture when I understand your profits, when I understand your expenses to make that $30,000 in your sales. What's your actual profit? What's your true profits? But you're in a position where you don't have good credit. And so without the good credit profile, you're going to continuously be in this cycle of taking out medium to high rate advances. That's what they're called, not loans technically in the space. So now you have to start off with like 40,000 at that point, and then come back. You wanted 120,000. Okay, what's your 40,000 going to make you? If you're paying back 58,000, can you make 60 plus $1,000? Well, yes, I can, Michael. I'm gonna double and triple my revenue, so I'll be making about 80 or 75 to 80,000 at that point in about 3 to 4 months. What will it do to your cash flow? So it becomes this whole like, can I get more money to make more money instead of taking money with these and saying I have a lot of expenses, I need to pay down credit cards. Yes, you can, and you probably are in a position to, but what about the rest of the money? What's going to happen? You're going backwards because you're not using enough of that money to grow your revenue and doing more with it. And your profit margins are not there. And it's not going to make a significant increase in your profit margins. However we look at that, gross or however we're looking at it, whatever you're netting. Okay, so equity backed on track here. You can pull equity out of commercial real estate or any investment real estate that you own. We are trying to do this whole second mortgage where we wouldn't have to readjust your first rate, especially if it's in a good place now and you don't want to have to adjust that to what it is currently or so forth. But it is too hard to do that. It's very seldom, it's very non-existent, rare that will actually happen. So they'll depend on that. And if things were to change, you would know about it. But you have to look at the opportunity of cost. Have you guys ever studied economics, micro at a macro level? You don't have to, but like I did, all that. And so you have to understand, what am I foregoing? What's my unit per cost? Am I getting satisfaction after every interval? No, it diminishes your return. So a lot of you like taking a lump sum, it's going to diminish over time. You needed this for the short term, but did you also need it for the long term? Yes, you did. But did you plan after 6 months or after 12 months the effect of having that money sitting in your account? No, I didn't. Yes, I did. But with equity that you can inject out of real estate, you have that money. Now you have a 30-year term, and then you have this whole other dynamic where you have 9 to 13 or 9 to 14% interest. Not bad at all considering the market conditions. And you're taking that money to invest in more real estate, rental properties, pay off other things, down payment. Then you're going to purchase a hotel, commercial real estate. And guess what? You didn't have to tap into your home equity line of credit, home equity loan, whether you have that or not. You didn't have to tap into any of that, but you have commercial, you have investment real estate that you can extract from and use that money, lower interest rates. Perfect. That's what I would be doing all day. Liquidity and equity backed. If I could just focus on that, which I can, I would just be going on that 110% and getting the money out of that, continuing to increase my business credit at the same time while I increase my personal credit, getting better limits. I have assets on hand that I can use in the case that I need to withdraw from. So there's a big gap, and you don't have to fully collateralize anything. There's a sale leaseback where you guys can give the title up to the lender until you pay the full amount and then you get it back like that. But do you really want to do that? So I have a lot of people right now questioning whether it's worth for them to readjust their rate. Now, if you are in a position where it'll be better, okay. If it's just going to adjust by a little bit, what would that do? Can you then rebound back by getting that money out, using that money effectively, and getting more money back into your pocket? That offsets everything. So a lot of you guys don't really think up here in terms of what could I do in about a year? What could I do in about 2 years with that money that I have remaining over? And I didn't have to tap into my home equity line. So those are the options that I did want to mention. I know there are more out there. There are plenty of more out there. Equity crowdfunding, regular crowdfunding, venture capitalists, angel investors. The list can go on and on. Borrowing from your friends and family, stocks, bonds. There's a few other notable mentions. One other one. Which one was the one that I was trying to address? Oh, well, there's a home equity loan or the home equity line of credit. I really don't want to say that that's a top because of how the market conditions are now. But that's one that people have had to turn to. And I would have turned to that if I were you the beginning of last year and even before that. Because now how things are, it's going to be harder to justify even doing that. Like kind of like a cash out refi. So all 5 options, and I'm going to close up here. I'll see if there's anything in the comments. You have 0% interest business credit cards. You have personal credit cards as well. You have even non 0% on those sides. that you can look at, but will you have optimized credit to get those? How are you getting that credit? If you have to develop something and start somewhere, okay. Personal lines of credit, we can add it in the combination of. You also have a term/installment loan. This is all through creative credit-based financing. But number one, we focus on the 0% side of the cards. Number two, personal term/installment loans. Those are very favorable right now for startups. I'm doing a lot of that, like plenty of it. Many people are wanting these. And it's not like they want, but they know they have to have that to be able to help them move up. And if they got another credit partner, like dang, a quick pro tip too is you can use multiple credit partners. Whether your credit is good or not, somebody else who's liable, and then we can do perhaps a balance transfer over. We can move things over from personal over to the business, and then we can clear things up with the balance transfer on those 0% cards. So you're getting a personal term/installment loan, paying off other cards, other expenses, and using it for what you need, then moving that over later on, and then getting these 0% interest business credit cards. The list can go on. And that's how the biggest of the biggest companies end up doing a lot of this. Now, there's a lot more to it than just that, of course, equity and things at stake and royalties. But that's the other one, personal term/installment loan. You also have the SBA loan, excuse me. You have number 4 being, I think it was grant opportunity. 401k IRA rollover. Number 5 being grant opportunities. Number 6 being equity backed through real estate investments and commercial real estate. Does anybody have any questions, or else I will get going? If some of you guys are watching later on YouTube, this is being streamed live right now on the TikTok channel. I tried doing this on Instagram earlier, but Instagram was a poor connection. It was giving me that signal. Instagram is always doing that. And just the other day, it didn't give me that problem, but today it was telling me poor connection, and it was coming in and out, and I'm like, okay, I gotta check something. What's going on? So I decided to then come over here, but it should be up in YouTube later. I'll leave it open for about a minute if anybody has anything. Right now, I'm trying to work things through with a lot of clients. Some clients don't want what they are getting, but their credit isn't in good position. The ownership of the business for some clients, they can't get what they want. Some of them will need a license so we can extend the terms in specific states. It's not easy right now, guys. It's very, very difficult for a lot of business owners to get funding. And it's also harder on my side because if you're not paying attention, if I'm not paying attention, which I pay close attention to the market, and I see what the dollar is doing in the economy, it is very, very, very bad. And the purchasing power becomes a lot less. And so what people end up doing is, because there's a high price now and there's this whole inflation going on, the cost of getting those funds are even more expensive. And putting that money to their business, it can only stretch them out so far. And so if they're getting like $20,000, they really needed $40,000 to do anything with it, and what they're purchasing and what contracts are securing. And at this time, people needing to have make sure you have a certain amount of money. There's more expenses that are rising, and so profits are becoming less. But we have to focus on a way of increasing those profits by focusing first on what you currently have, not increasing more of what you don't. Focus on your current systems. Focus on what you can make more efficient. If that means you have to work with the specific equipment you have, but you can automate it better, semi-automate, you can make it more effective, unit per costs, and you're bringing your costs low. You're putting the right personnel. There's so many things you can increase. Your marketing and advertising, not necessarily increasing your budget and spending more to acquire a customer, but increasing the conversion on your landing page. What do you need to do to change that? And so we think about how much more impressions can we get, but the more impressions doesn't always equate to getting more clicks on something. Or less impressions doesn't mean you're going to get more clicks, or less impressions means you're going to get less in a lot of cases. It just can be a lot more targeted, and you have to know your competition. If you don't understand your competition, it makes everything that just much more difficult. Okay, there's nobody with questions. Appreciate you all. Thank you all for tuning in. This should be up on the replay on YouTube. Appreciate you guys again. Thank you for your energy and your time, like always. I have to get back to evaluating documents and doing a lot of things, and with a lot of people going through things right now. And so I'm going to attend to that. Appreciate you. Thank you for tuning in, and I will speak to you on the next one. Take care.